Since the world economies are looking a lot better this year, many new investors are going to be flocking into the stock market, hopeful for the promised 7 to 10% per year in the stock market. However, if you're new to investing, you must remember that before you start investing, there is one thing that you must have, and if you don't have this, you're not prepared for the ride that is the stock market. Now, of course, we are talking about an emergency fund, a topic that I don't expect any views on, but I think is an incredibly important topic to talk about. So what is an emergency fund and why do we need it? So an emergency fund, just like it sounds, is a pile of cash or any other stored value that you can get very quickly in case of an emergency, and such emergencies include and are not limited to accidents, sudden healthcare bills, losing your job, and unexpected bills that we get, such as an unpaid tax bill or even a broken boiler. And you might be thinking, I've never had an emergency fund and I was always fine. However, if you're looking to put your money into the stock market, you must know that in the short term, the stock market is probably one of the worst places to put your money. Short term, we're talking about anything less than typically 10 years. The stock market has a lot of volatility, meaning that one day you could be up 10% and the next day you could be down 20%. Now, if you put all of your money into the stock market and you might be needing that money, what happens when there is a downturn of 20, 30, 40, 50%? Can you afford to lose that much money? And if not, that is exactly why you will be needing an emergency fund. So the next natural question is, how much do I need for my emergency fund? And depending on who you ask, this will be a different number. Now, because this is personal finance, only you can really answer for yourself how much you need as an emergency fund. Typically, experts agree that you need around 6 months of living expenses. So for example, if it costs you £1,000 per month, including your rent and your main essentials such as food, then you need around £6,000 in living expenses for that to be an appropriate emergency buffer. Now, I don't know about you, but it's very hard to actually save 6 months of living expenses. And because it takes so long, people often forget about putting money into the emergency fund. Also, 6 months could be a very long time. So imagine you've lost your job. Would it really take you 6 months to actually get back on some sort of income? And if you really did lose your job, can you not make some cuts in order to make what you have go a bit further? So a sensible amount to have for an emergency fund can often be 3 months worth of emergency expenses. So if your normal expenses month to month is around £1,000, maybe you could still survive on £600 a month, meaning that your emergency fund only really needs to be around £2,000. So naturally, leading on, the next question that people may ask is, how on earth do I save for an emergency fund? Of course, I can't answer this question for you because I don't know your personal situation. And that's exactly the same as saying, how do I save up for a brand new car? You're going to have to make certain cutbacks in your expenditure in order to actually save some money that you can allocate to your emergency fund. But hold on, think of it like this. You are going to invest anyway, you are going to put a certain amount per month into the stock market. So why not, instead of putting it into the stock market, build up that emergency fund? Whether it's £100 per month or £1,000 per month, you're much better off doing it before actually putting your money into the stock market. Now, the most important aspect of an emergency fund is the fact that it must be able to be accessed during the emergency situation. So this part of the video, I would say, is the most important. Now, you can save up your emergency fund and put it under your mattress, and that should be fine in an emergency. However, there's one thing that we would be missing out on, and that is the fact that inflation is going to be attacking the value of our pounds under our mattresses. Therefore, investors want to put their emergency fund into something that is at least giving them something above what a mattress would be giving them. And for this reason, there are a range of options in which you can put your money into several different accounts, and I'm going to go through some of the most popular types and talk about the advantages and disadvantages of putting your emergency fund into these types of accounts. Now, one that is very popular on YouTube are premium bonds, and essentially what premium bonds are a government-backed savings initiative. You put your money in and you don't get anything guaranteed. If you're lucky enough, you can actually win prizes from as small as £25 to as large as £1 million. And this is on a monthly basis, although you're not going to be winning £1 million every month. This is extremely popular for many investors, especially those on additional rate tax brackets, as there is no tax on anything that you may or may not make on premium bonds. Also, because it's backed by the government, your money is very safe. Another key bit of information about putting your emergency fund somewhere is that it's actually safe when you need it. Are premium bonds a good idea to hold your emergency fund? I would say yes and no. The advantages of premium bonds are that they are very safe. However, one of the slight disadvantages of putting your money into premium bonds is that sometimes they take 3 to 5 working days to withdraw your funds. So this could mean in an absolute emergency situation, you could be waiting up to 5 working days, which could often prove to be too late. And that's why I wouldn't completely recommend premium bonds as an emergency fund. However, I do keep the majority of my emergency fund in premium bonds because I am able to plan out when I'm going to need these emergency funds. For example, I also hold a smaller portion of my emergency funds in an instant access savings account that allows me to get that money instantly if I really needed it. From then on, I can pull out more from my premium bonds account if I actually needed it in the longer term. Because it is an emergency fund, it should last you the duration of around 6 months. Therefore, you don't really need the first few hundreds straight away. You can plan to withdraw them at a later date, slowly drip feeding back into your accounts to give you that longevity that you need for 6 months, let's say. It's worth noting that you might not need the full 6 months at any given time. This really is for your emergency, and it doesn't mean that whenever a crisis happens, there's going to be 6 months of blackout and no income coming in. The other place you could possibly put your money in is government bonds. Whilst government bonds in the UK called gilts can be a very safe place to put your money for a particular term, they are mostly not a good short-term place to put your money as it really depends on the length of the bond. Typically, government bonds are around 10 years in length. However, recently, due to the inversion of the bond yield curve, we're seeing gilts as short as 1 year. However, going forward, this might not be the case. Therefore, government bonds aren't a great place at all to put your emergency fund, as it could take you over a year to withdraw that money back. If you decide to actually pull your money away from bonds early, you can often be selling that bond at a much lower price, therefore you could lose out on your money. In an emergency fund, you should be able to take out all your money with the same value you had before or more from interest without paying a penalty. Now, the other place you can put your emergency fund and has been very popular over the past 2 years are money market funds. So money market funds are essentially a pool of money put into short-term government bonds. Now, depending on the fund provider, they manage the money, and because of that they give you a lot of liquidity, meaning that when you need to pull out your money, it really only takes around 1 to 2 business days. This can be a great place to put your emergency fund. However, do note that if you need money instantly, that is not the greatest place. Therefore, maybe put 80% of your emergency fund within money market funds and the rest somewhere else. Now, the other place that you could put your emergency fund are within ISAs, which are individual savings accounts in the UK. For example, a cash ISA or a stocks and shares ISA. They can be great because they're mostly safe. Something like a cash ISA does allow you to withdraw whenever you want most of the time. However, I would not recommend that as a good place to put your emergency fund. This is because every year you get a £20,000 allowance to fill up these ISAs. Anything you withdraw from these ISAs are just taken out of your allowance. So there's actually no point in putting any short-term money into ISAs. Other places you can put your money could be things like investments, whether it's property, gold, or even the stock market. Again, I would say that is a terrible place to put your emergency fund. The whole point of an emergency fund is that it isn't within any investments. With any sort of investment, your capital is at risk and there is always likelihood of volatility, meaning the value of what you put in, your principal amount, can go down in the short term. Therefore, in my opinion, one of the most sensible places to put your money in is within bank accounts. Now, until recently, bank accounts have been giving incredibly weak interest rates, but this has changed due to the high central rate from the Bank of England. There are two main types of savings accounts. The first one is a fixed period, usually 1 to 5 years. This gives a higher rate, but it means your money is locked in within that period. If you do want to take out your money before that, you are going to be paying a penalty. Therefore, this is not suitable for an emergency fund. The other type of savings accounts are instant access savings accounts. They're offered by any high street banks, and what they do is allow you to withdraw the money you've put in almost instantaneously. So whenever an emergency rises, that money is available to you at a click of a button or a tap on your phone. So therefore, I would say instant access savings accounts are probably your best bet for putting your emergency fund in, or at least 20% of your emergency fund, so that it's available as soon as you need it. So make sure to check out some of my other videos and I will see you in the next video.